Do you want to bring in Bill Adams? He's the chief economist at Comercia Bank. Bill, it's great to have you on the show today. It is a holiday shortened trading week. Today is the first day of trade, of course, to honor President's Day yesterday. What is on your radar?
Hi, Kristen. This week, we're going to be watching most closely the minutes of the Fed's January decision, which come out on Wednesday. And I expect them to reinforce Chair Powell's message from January that the Fed is going to be on hold for a while. Otherwise, we're going to get some housing data from January, which I think are going to show, like the retail sales report last week, that the bad weather and the terrible wildfires in Southern California were big drags on economic activity in the month.
It is interesting to see that data impacted so starkly. Bill, do you anticipate that those factors like weather, like the flu season, could continue and impact February's data?
Well, we'll get a bit more of a peek of that towards the end of the week. S&P Global publishes their flash estimates of the purchasing managers indexes for the month of February. I think we're going to see a tick up in those releases. The flu season is still with us, but the weather is better and the wildfires are returning to rebuilding in Southern California. So that should be better as well. And then I think more broadly, the financial conditions are buoyant and broad measures of optimism about the economy, I think, are going to be the broader theme.
We're going to highlight some of those rebuilding efforts in the wake of the devastating wildfires in Southern California a little bit later in the show, Bill. So let's turn to the Fed minutes, though, because those are going to come out on Wednesday. The next Fed meeting, of course, is in March. What do you think we need to hear from those minutes to get a better sense about where this economy is heading?
I'm going to be watching the minutes to see if there's clear criteria the Fed is using to set up what would drive their next rate cut. The Fed signaled that they're on hold near term, so I think March is a pretty low stakes decision. But the Fed is going to tell us, do they need to see the unemployment rise a quarter percentage point, half a percentage point to cut rates? Would they need to see the inflation rate fall by 1/10 of a percent, 0.2%? We got a pretty hot CPI report, a PPI report for January, combination of the surge in egg prices, higher gas and diesel prices. Hotel rates went up during the inauguration. So I think some of that should be unwound a bit by March. But the Fed, I think, will tell us more about what they're looking for.
I want to hear more from you, Bill, specifically about consumer sentiment. We'll get a read on that to end the week on Friday, and it does come after just a little over a week ago. That consumer read did show that Americans anticipate inflation to increase by a full percentage point this year to actually above 4%. Do you think that's warranted? How could this report on Friday perhaps provide more color?
Consumers are quite worried about inflation from tariffs right now. And that's my takeaway from the recent consumer sentiment surveys. Now, the exact level of the consumer sentiment, forecast of inflation, I don't worry too much about that. I look more at the trend there, and the recent uptick, I think, is eye-catching to me. It's eye-catching to private sector economists, and it's eye-catching to the Fed. And I think it's another reason why the Fed is concerned about the inflation outlook and why they're hesitant to take their foot further off of the brake right now. So we'll see what happens with tariffs. I think that'll drive what consumers are ultimately thinking.
And based on what we've heard about tariffs, what do you think is the right way to navigate that based on the information that we have now?
So companies so far have actually not taken a lot of action in response to the tariffs, best as we can tell. The Comercia Economics analysis of the inventories data in late 2024 and early 2025 shows that we haven't seen a big run-up in inventories ahead of higher tariffs. I think that wait-and-see approach seems like it's paying off for now for companies with Canada or Mexico supply chains. Now, looks like prices are going up for imports from China. So I think it's going to vary from company to company. The impact on investors, I think, is going to be partly through the compression of margins from higher input costs, but also investors are, I think, are going to be watching what will happen to export-oriented businesses and global-oriented businesses, because while imports and exports are a relatively small share of the U.S. economy, U.S. GDP, they're a larger share of S&P 500 profits.
Bill Adams, great to get your take, especially as we make sense of all of this economic data coming our way. Bill's the chief economist at Comerica Bank. Thank you.
Thank you for having me.